Now, South Africa's unemployment rate increased by 1.7 percentage points to 32.5% in the fourth quarter compared to quarter three last year. 2020 saw the highest jobless rate since quarterly data became available in 2008, with more people searching for work amid the easing of lockdown restrictions. For an analysis of the latest data from Stats SA and a look at the latest company news, we're joined now by Mutooni. He is an analyst at ABSA Asset Management. A very good afternoon to you, Mr. Mutooni. Good to have you with us this afternoon. Now, the rand has been flat since early trade today. Does the volatility in the rand have anything to do with the local economic data which came out today?
No, I think it's a flow through from what you've seen in the past couple of days. As the dollar strengthened a little bit and you had higher bond yields there, then the rand weakened a little bit yesterday. This morning it's a little bit firmer. There's a bit of trepidation ahead of the budget tomorrow. I think there was very little that was in the labor force survey today that was a surprise to a lot of people. So I think it's more the budget and what's happening in the US.
And what are your first impressions? I know it's still a bit too early. A lot of people need to take time and actually go through the entire, presentation and the statistics. But your initial impressions of the fourth quarter numbers?
If you think about it, 8 million people unemployed. That's pretty much half the labor force. Doing nothing, earning nothing, need to be supported in some way. It's a number that we're familiar with because it's come out before, but it's shocking. It's the level of dependency has increased. The tax take is much lower, and there doesn't seem to be a way out of this. So that would be my first impression, and to be interesting to see if the minister has any solutions or suggestions coming into the budget speech tomorrow.
The expanded definition of unemployment, including people who have stopped looking for work, was at 43.1%. in the prior period, with an increase this quarter. How significant is this increase, and is there a surprise in the sectors that were actually most hit?
No surprises, and it's a trend line. What you've basically seen is over time, it's just become harder and harder to find jobs. So I think when people lose jobs at certain levels, they give up pretty soon. So no real surprises. It's still just a big shocking number.
Let's talk about the financial sector being the biggest loser here. Your impressions on that, as well as the reasons behind it being the biggest area of hemorrhage.
So the sector has become incredibly competitive historically. And if we're just talking about banks specifically, you've seen increased competition from online banks, payment systems and stuff like that. So their focus on cost has been massive. Automation, new systems, and that sort of thing. So it's not really a surprise. Remember as well that we were unable to provide services during the period of the lockdown. So maybe that was an opportunity that some banks or some financial institutions took to let go of people. But I think it's just been a trend line. The number of people employed in the financial services industry has been declining over time because of these drivers that I've just mentioned.
Now, the budget on Wednesday will also be another tough balancing act for the finance minister. How vital will job creation be for the minister in light of the recent jobless rates?
In truth, the minister cannot drive job creation through the budget. It is through policies, enabling policies and encouraging private sector investment. All he can do tomorrow is have an enabling environment around the taxation framework, where government will direct its spending, try and rein in the government's own wage bill, and things like that. But in actual creation of employment, I don't think he has much of a direct role. It's around creating the environment and encouraging the private sector to actually be comfortable employing people. So what we want to hear tomorrow is less about higher taxes and more about better, more directed, more focused government spending into infrastructure and things that will allow the private sector to create jobs.
Lastly, Mr. Mutooni, let's take a look at some company news now. Discovery released its trading statement for the 6-month period ended the 31st of December 2020. If you could take us through those numbers.
So they basically guided that their earnings will be down between 5 and 15%. But as you saw, the share price ticked up a little, but that was because they assured the market that they felt that their provisions for this COVID environment were more than adequate. So you wouldn't expect to see surprises in subsequent periods, and also that the individual business units were all functioning and operating well, despite the decline. So I think a broadly positive update, despite the negative numbers in them.
We'll leave it at that for this afternoon. Thank you so much. That's Mr. Roy Mutooni, ABSA Asset Management there, giving us our market update on this Tuesday afternoon.